Hi guys, I hope all of you are doing well. This is your Nifty Guy, and welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we can trade the following day with much more confidence and clarity. Right. Today's video will be very important because I'll explain some key characteristics of pullback, which I speak about so often in videos almost daily. Right. So my trade setup, which is there, which I explained to you guys in the videos, has a very important component, which is a pullback. And how do you decide? Because I've never spoken about it before. So today's the video where I'll be speaking about the same concept. How do you decide if the pullback is a pullback or is a the pullback is a valid pullback, and that should be considered as your entry alert criteria for that particular setup is something which I'll gonna discuss based on today's price action. So please pay close attention. Uh, so what we'll do is we'll analyze what we had planned yesterday versus what happened in the market today. How did we trade? How did we trail? How did we take profit? How did we take hit our SL? And then we'll plan the trade for the coming day, right? So on that note, we'll start with today's video. But first things first, in case if you guys like the way I analyze Nifty in a very, very simple way, put out and teach you guys price action concepts, please like the video, subscribe to the channel, uh, put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to both, right? So on that note, let's start with today's video. Uh, right. So yesterday, what we had decided was there was a setup which was around here. In case of a flat opening, we could have taken a trade at the break of this particular trend line. Long was only above this, and below previous day's low. We were planning again a short with a pullback. Now, market opened with a gap down immediately in the first 5 minutes, gave us a closing below the previous day's low, right? Now, this is what I'm also trying to tell you is how I start thinking, the moment I look at these things being happening in the market. So now the market, it is time for us to be alert because market has formed an entry or an alert criteria as per our uh, trade plan. Now, all that we need post this is a pullback candle. So what do? We don't get excited, right? Trading is a very, very, very boring job. Uh, you just need to sit quietly and comfortably and look and wait for your setup. Most money is made in waiting and in patience, and it is lost only when you become impatient, right? So right now, all we needed to do was wait for our setup to be formed. And for our setup, we needed a pullback. Say, for example, this particular candle would have formed like this, but a good inside bar and the low would have taken out. It would have been a very lovely trade, right? But market has its own plans, and we cannot fight the market. The market is extremely supreme. So what we do is we wait. Now, there was this particular green candle which had formed, right? And many people would have could have taken a trade below the low of this candle, which is again not a wrong trade. And the SL, when you are taking an entry with this particular setup, would be above this high, which in my opinion is a big SL. In case you would have taken it, uh, try to understand a thing. Okay. In case you would have taken it, you would not have hit your SL in spot. But uh, I'll also emphasize on the importance of trading in next week's option if you are into option buying. After your entry, market went sideways for a good half of the day, right? And in case you would have taken or you would have traded in the current week's expiry, even if your direction is right, ultimately the market gave a big momentum dip here, some dip around here. You could have made money, but mostly I assume a lot of time decay would have taken place during this particular sideways price action of Nifty. So that is the reason why I always emphasize on the importance of trading in next week's expiry option if you are into option buying and you trade Nifty weekly expiry options. I did not take a trade below the break of this particular uh, green candle. Now, although this candle is green in color, try to understand the psychology or the logic behind its formation, right? The bulls and the bears, there are two categories of people in the market. The bulls tried to take the prices all the way up to this particular level, but came down crashing and closing near the opening of the candle, and near the bottom of the candle, right? Even though the color is green, the sentiment for me in this candle is negative, right? So for me, this is not a pullback candle. Now, try to understand what is a pullback candle. A pullback candle is not simply any opposite color candle in the trend. So when you are looking for a bearish entry, right? We are looking for a planning a bearish trade around the break of previous day's low, and we need a pullback, right? So the pullback needs to be any opposite sentiment candle, right? Not just color. So this candle, although it is green in color, I do not consider this a valid pullback because there are not enough strength of buyers or strength of the opposite side, which is seen in this particular candle, right? It has, although it if it would have closed around the highs of here and then they would have the low would have taken out, I would have happily entered the trade around this particular point only in the 9:30 candle. But that was not the scenario, and that is the reason I did not enter the trade around this level, right? So this is something very extremely important. So when you are in an uptrend, you're trying to trade a breakout, you need to see a good seller candle, and that is something which is a valid pullback, right? Not something like this which shows negative sentiment around here instead of positive sentiment, which we needed in this particular candle for it to be considered as a valid pullback. I hope I am able to explain it to you guys here. So because I decided not to take this trade in the morning, I had decided that when I'll be making the video, I'll put down this emphasis on this particular candle about why I did not take a trade around this candle. Now, this pullback is a valid pullback for me, wherein there has been sign of some sideways consolidation breaking above these highs, wherein buyers have shown their strength. Now, any entry below this low would have been my trade anytime. So, post this, you can simply mark this low, take a trade. Once this low gets taken out, market consolidated a lot in the sideways range. In case if it would have broken down around here or anywhere around here, you could have taken this trade. It broke down around here now. Once it broke down around here, where would be the valid SL? For me, the valid SL is above this particular last swing high, which was created. Market again gave a pullback. Market will not move in a straight line. Just because you have entered the market does not mean the market is going to go drop from there, and gave a pullback again, which the SL did not get triggered, moved down. I moved my SL around here, moved around. I got my SL around here, which got triggered around here. All in all, not a very good trade. Now, I'll explain the logic as well. Although, because I was trading in next week's expiry option, I got out almost cost to cost. Uh, the reason I also was looking at the open interest data, which I tell you guys that that is something which I only look at on uh, expiry days. Now, that is something which I look at for a particular reason. So, I look at where is the open interest heavily placed on the nearby strike prices, where in the market, if it goes against those people who are heavily shorted call or put options, wherein they will be forced to exit their positions, right? So today, the on the support side, there was heavy call writing at 24,500 put, right? And on the upside, there were heavy call writing on 24,600, 24,700, every all these places, right? And 24,500 also at some point of time when this particular level broke down, there was the call writing at 24,500 increased, and market basically trapped both sides today. First, it broke down below 24,500, trapping people who were long in the market by shorting 24,500 put options. The put prices inflated. They were forced to exit. Market gave a good momentum in the options as well on the put side. And once this was taken out, this particular low was taken out, market immediately went into the upside, also striking stop losses of people who were long, sorry, who were short in the market, right? Opposite of it, which were they were called shorts, which were there. So when they have basically shorted call options, and when the prices are moving with a momentum up, they will be forced to exit their positions, which will lead to a good upward rally as well again. So this is something which happened in the market, and for this particular reason or for this particular trade. So today they were equal or almost good amount of call and put writing on both the sides. But that is something which I observe for a trade in one particular direction wherein I can look for a either a short covering or a long unwinding based on where the price is moving or where the market is forcing people to take their SLs, right? Momentum def will uh, come only when people are forced to take their stop losses, and that adds fuel to the fire of the move which is coming. So that is something which you guys can also make a practice of opening it in sensible. You can put down the open interest data along with change in open interest, right? You can mark that there's an option of toggle switch which is there, which says change in OI. Put it down to last 5 minutes, because if you see people who are exiting, say for example, market is moving up, and if you see there's a good amount of call writing which is there, and then people are exiting that particular trade, that means the people are exiting their the positions, they are taking their assets, and then the move can come in that direction, right? So that is something that you guys can look at. So I obviously did not participate in this particular up move because I had just taken an SL here. I was not ready for a planted. Otherwise, this was a very good trade wherein market after taking out this particular low consolidated and immediately went up above this high. You got a pullback candle, inside candle which was there, and then you could have traded. And this is something which is also called as a trap setup wherein market immediately reverses after breaking a swing. So market broke down below the day's low, immediately formed a base and immediately reversed. So this was and gave us a closing above the last swing, right? So this is something, these are the price action points which needs to be paid attention to. And as it is, I trade very, very cautiously on expiry days. I try to keep my trades to the bare minimum because market has got such volatile moves, right? Now, well, let's plan for tomorrow. Markets can be a little tricky. Currently, we'll just delete these. These are of no more importance for us. Market can be a bit tricky. And like we say, when in doubt, zoom out. So market has basically taken some liquidity from here. So this was the last swing. Say, if you look at a 75 minutes time frame or even an early time frame, you can see this was the last swing. This was the lowest point which was made before markets made a new high. Today, market went down below that particular swing low, took some liquidity, went up, right? So this changes some things of price action, not price action, basically price action remains the same. The story that I keep on talking to you guys about within the market, right? Now, if you look at the 75 minutes time frame, we'll just delete this particular zone which we had drawn because number one, market has already taken one rejection from here. Plus now market has formed a new swings and a new low. So this particular fib level which we had drawn as per previous days is no longer valid for us right now. So we'll not be using this particular swing. But if we use a fib from this high from where market took a rejection to today's low, we will again be marking the 0.5 to 0.618 zone. This level is important for us, right? Now, if we come back on a 15 minutes time frame, this is where we plan most of our trades. Now, try to understand a thing. Market has taken some good liquidity around this low, broke down, immediately reversed, right? That shows presence of some buyers over here. Plus, we are near the gap border area, which in itself is again an important support zone. Right now, the gap border, because this is big, it might not get filled up immediately. In case, even if the gaps can get filled easily, it is not a rule that if there's a gap border, market is going to take support from here. No, that's not any rule as such, but usually gap borders will act as a good support. So market can, in case we are looking at any short trades, we need to be cautious right now because we are very near to a gap border, which is support area. We have just seen the presence of some uh, buyers around these levels, wherein just after taking liquidity, market has given a sharp bounce. So these are the points that we will look into consideration, and we'll mark today's low. I will be shorting the market only below today's low with a pullback. Now, once I am shorting the market around here, I'll keep the quantities low. right? There's no point in taking unnecessary risk. I'll keep the quantities low. Plus, I'll observe the price action very keenly around this gap border area, and any sign of positivity or any sign of bullish momentum, any sideways consolidation, I will be very quick to exit my short positions because we are in a good support area, right? For a long trade. Now, ideally, long should be created above this particular zone only. Market, in case the market has to continue the bullish, just a second, guys. This was the zone as per the 75 minutes time frame, but market gave a pullback around here. So, in case if we take this particular fib from this high to today's low, so zero point 0.5 to 0.618 is here. So, we can, the both the areas are quite close by. What I'll suggest to you guys is, if we look at the entire fall of today, market has recovered. I am sure market, just by looking at it, I am sure market has recovered more than 50% of the fall which was there, right? Yes, market has given us a closing above even the 0.618 zone. In case the selling was there, say for example, the selling in the leave the first 15 minutes aside, the selling was slow, right? But look at the buying momentum, right? So these are some things which we need to look at. So what I will suggest is you can take a small position, early kind of an early entry around here. Once market breaks up below today's high, best case scenario would be market opens flat, spend some time over here, breaks it, gives us a pullback, we create a long position. We will definitely be a little bit cautious around this level, but then this is as per the 75 minutes time frame. Obviously, on a higher time period, the levels will hold much more importance, but uh, we will, but looking at this particular momentum which is there, I think we can look at a long trade around here. Plus, once this high gets taken out, right, we can look at adding more quantities. Now, there are always ifs and buts which are there. Once this high gets taken out, this is a very small gap which can easily be filled. So, in case if we are taking a entry around here, we can look at adding more positions when this particular high gets taken out, or this can be the first target, and then the gap filling trade can be the second target. And then we can look at, based on price action, we can trail our trade, right? I will not be in, say, for example, market opens with a gap down. I will not be interested to trade in this particular zone because bulls have shown their strength around here. Markets opening around here will invite some volatility in which I do not want to get trapped. What if market opens with a gap up? Let market open with a gap up, say for example, some uh, little gap up around these zones. I will wait for the market to come down around this level, show me some consolidation, and then I will be buying into the market, right? If market opens with a very big gap up, again, I'll wait for the markets to come down and then only I will be interested in buying. I will not be buying the markets on a gap up. So that will be the simple uh, plan of action for tomorrow. I hope I have been able to explain the relevance of pullback, how to identify a good and a proper pullback, and also how to make a trade plan for tomorrow. So this is all from my side for today. This is your Nifty Guy signing off. Please do not forget to like, subscribe, and comment on the video. So that's it from my side for today. I'll see you guys again tomorrow post the market. Cheers. Thank you so much.